If you're 56 and older, if you sell the property, you can transfer them to the other property. Something that happened to me, I was driving 2 weeks ago or 3 weeks ago with some friends, and we were driving to San Diego, and one of my friends says, hey, can you help my mom? My mom wants to move from Encino, wants to move to Santa Clarita. She wants to be closer to the kids, and closer to the family, and the condominium in Encino is having a lot of issues. Can you help her with all the process? I said, sure. I said, how old is your mom? And she says, well, it's about 70 or between 60 and 70. I said, okay, I mean, you can transfer the property taxes also. I said, what do you mean? I said, yeah, you can transfer however property taxes she's paying in Encino, we can transfer them to the new property. And he goes like, you're kidding me, Oscar. That's gonna convince her 100% because she's paying very low property taxes right now. So that is a done deal. And we can do that. In the past, you had to buy a property. So let's just pretend that in this case, that her mom purchased a condominium, and she purchased the condominium 30 years ago, and she's paying the condominium in Encino right now. It's going to be valued anywhere in 650, Maria says. So 650. So if you were paying taxes in 650, you should be paying taxes about $7,000 to $8,000 a year. And let's just pretend that she was paying taxes $1,800 a year on a property that is worth $1,650. So in the past, if you buy another property, in order to transfer the taxes, these taxes to another property, you have to buy a property within the same value or less. Within the same value or less. They used to give you a margin there that it can go higher, but a very low margin. It was useful, but it's equal or less value, and you can transfer the taxes. And in the past also was only between LA County, so you can transfer the taxes from LA County to LA County. Or you had to be within the same county. So you had to be in the same county in order to do this. Now they updated. In the past it was Prop 57. Now it's Prop 19. And now you can transfer these taxes, and let's just pretend that this property is 650. You can transfer these taxes to any property on any county. Any property on any county. So that's a big change. That's a great change for people that are moving between Ventura County, Orange County, or Kern County. That's great. And the second thing, if for whatever reason, now you purchase a property of $800K, now you can transfer the taxes with one exception. In the past you couldn't. You had to buy something that was cheaper. Most clients, and with the prices going up, and obviously you always want to upgrade, in the past, most clients were buying a higher value property. Most of them. So it was very hard to run into a client that it was actually selling at 650 and buying something 650 or less. Most clients want to upgrade, so it was very hard to find a client like that. Now they say, now you can transfer the taxes with one exception. So you can transfer the $1,800 for the 650. For the rest of 150, you're going to be taxed at 1.25, and you can do that. So keep it in mind, whenever you're dealing with a client who's selling and buying another property, that you see him close to my age, then ask him, hey, what's your age? So probably you can do this. Keep it in mind, it's a great tool. Any questions, comments? No? You can use it up to 3 times. And you can also use it, I mean, if you're gonna run into this situation, it could be that Dennis is always calling clients and always calling clients in distress. Correct me if I'm wrong, Dennis. But if a client loses a property on a fire, on a wildfire or something like that, then the client can transfer the taxes to the new property. So I lost my property, I had to sell it, I had to insurance, I sold it, and I purchased another property. If the client was in that situation, he doesn't have to be 57 years old or older. He can do it whenever something like that happens.
They still qualify for the unicycle segment?
As long as they were, yes, they should qualify because there's only one. So I had a situation where a mom was selling a property, and now she was buying, but she was buying with the son. We wanted to do the loan from the beginning with the new taxes because we can do the loan with the new taxes, but we decided not to. The clients qualify at that rate, and we decided just to keep it at that rate. With the underwriting, and the client was cool, so we went that way. But they should qualify. Questions, comments? No questions?
Jefe, okay, if, for example, in the title, there is the person is 56 years old, but there's the other one is like 45 years old, is still qualified or no?
Yes.
You want to purchase the other one property together?
Yes, as long as one is over 65, yes.
Okay, thank you.
56, I'm sorry, 56.
Okay.
On that same proposition, you could also transfer to between parents and children and grandparents and children.
I think there's an exception. What Pulido is talking about is that you can transfer to grandchildren and parents. I think there's an exception on that. We'll let you know, between Pulido and I, we will let you know on that. Because if you make use of the proposition, let's just pretend that I'm over 56. So if I make use of the proposition, and then I want to transfer title to my son, in that case, supposedly taxes don't change. But if I transfer title to my son, if I use this proposition, then there's an exception there that you have to be careful. We'll give you the details on that exception. Comments? No? Okay. So I just want to start with that because I'm sorry, but I ignored Alan yesterday. He left the flyer at my desk, and as soon as I walked in, I saw the flyer, and then I started reading, and I remember about driving to San Diego and talking about this friend of mine. And I said, well, this is a great tool. So let's go to the other thing. If there's no participation on this meeting today, I mean, we're gonna have a very boring meeting. So I consider myself a very conservative guy. And when I say conservative guy, it doesn't mean that I'm Republican. It means that I'm conservative with my money when it comes to investment. When it comes to investment in properties, I like to see my money in the bank. Love me some money in the bank. If I don't see money in the bank, I go crazy. My accountant sometimes tells me, "Hi, mijo, if we move this money and we do this and we do that and we do that, we don't pay taxes." I say, no, pay taxes, because I don't want my money to be running around for 6 months or 4 months and never see it on my bank. I want to see it in my bank. So pay taxes, and whatever is remaining, I want to see it in my bank.
You don't want your money working for you.
I don't want my money working for me. So, but even though that I have that mentality, for example, I know for a fact that in this case, Dennis, I mean, I've been using you a lot, Dennis, I'm sorry, but in this case, Dennis is very aggressive. He has a mentality of investing, and investing in real estate. and investing aggressive in real estate. And also my brothers, same way, very aggressive in investing in real estate. I'm more conservative. My partner, the business partner, also very aggressive. I'm more conservative. I want to see my money. I want to put it on CDs. I make my plans. I put it on 401ks. I put it on IRAs. I put it everywhere where I want to see my money. Now, but it's my job to work with people that are conservative and work with people that are aggressive. And if I can speak both languages, I mean, you will do a good job. So you have to be very mindful when you're talking to an aggressive person or when you're talking to a very conservative people. So lately, I've been doing a lot of loan sightings. And the ITIN market, guess what they want to do as soon as possible? Their mentality. Obviously, right at the get-go, you're asking for a big down payment. If I do an ITIN, I know that I can do it with 15%. I always ask 20%, minimum 20%. And they even ask me, hey, can you do a 15? I don't do 15%. I do 20, take it or leave it. But guess what an ITIN client wants to do as soon as possible? Refinance?
Lower his rate.
Lower his rate? Obviously, you guys don't deal with ITIN clients then? Because what they want to do as soon as possible is pay the house. Pay the house. The first question that they say is, hey, can I send more money to the principal? How soon can I pay the house? Some ITIN clients are self-employed. They have tons of money. Obviously, they are here in the country. They save a lot of money. I mean, I purchased a property that it was $800,000, so they save $160,000 just to put as a down payment. And guess what? If they save $160,000, their mentality is, I want to pay the property. If I want to pay the property as soon as possible, that's a conservative mindset. That's a conservative mindset. Obviously, yes, and Maria's right, and Ademar is right also. Lower the interest rate, lower the payment, but their mentality is set on paying the property. Now, how soon can I pay my property? If most of you have this formula, so I just did a transaction, it was for $255, 25%, at a rate of 8.99, and their payment is $1,500, just the payment. So this is for all of you that have this calculation, and Pulido has it also, and we can share them. This is the structure of the payments. This is the structure of your payments. Your payments for 30 years are always going to be $1,537. $1,537 always. Now, the interest and the principal, give me 1 second. The interest and principal changes. And it changes according to time. So you're paying the principal of the debt. So you're paying the principal on the first month, but you're paying the interest of the debt of the first month, and the rest is principal. If you lower the principal on the second month, the debt is lower. You pay the interest of that amount that you owe. So the interest is lower, the principal is higher. Interest is lower, principal is higher. Interest is lower, and that's the way that it works, the amortization. And it works with vehicles, it works with everything. When you buy a house, when you buy a car, if they tell you we're gonna give you an interest rate of 5% over 36 months, you can use this formula, and you can see if they're giving you the right payment or not. That's what I did. No te haga bobo, Jacobo. So as time goes by, less principal, less interest, more principal. Less interest, more principal. And in 360 months, you pay the debt in full. Now, their question is, hey, if I put more to the principal, how soon am I going to pay it? Well, if you put more to the principal, for example, if you put $10,000, then for whatever reason on this client, I figured my numbers and everything, and we made calculations and everything, and I said, well, you're gonna invest a total of this amount, and that total, it was $10,000 less. And I said, hey, dude, do you have the $10,000? If you wanna put it into the principal, this is what's gonna happen. If for whatever reason you have those $10,000, you wanna keep them to fix the house, fix the house. But if you put them into the principal, the payment is going to be the same, but you're gonna pay the debt in 24 years. So you're gonna pay the debt in the month 289. In 24 years, you will pay the debt. If you just, instead of 30 years, if you just put those $10,000, 24 months. 6 years, you take out. In those clients, they say, great. I mean, what if I put $500 more? My payment is $1,500. What if I put $2,000? And you can do it this way. So is it clear? Clear as mud, guys? There's people that are aggressive. There's people that are aggressive. People that are different. Let's just say there's two types of investors. There's one investor that wants to do flips, and one investor that wants to rent. So recently, and Juan Rodriguez helped me with this client. Recently, we did a loan, 2 loans, for a client in Bakersfield. So the client in Bakersfield had a property. Obviously, the client is actually from Wasco, and I'm the king of Wasco. So how real estate agents, they call themselves, I'm the king of Wasco. In Wasco, there's a city that is very close also that is called Los Hills. And Los Hills, I think, is a proper name because it's a lost city. There's nothing there. So they had a property there that it was fully paid off. Fully paid off, and they were collecting rents. And the collecting rents, they were collecting rents about $1,500, $1,800, and it was fully paid off. Los Hills is about half an hour from Wasco, where they live. Wasco does have a Walmart, does have a Home Depot, but Los Hills doesn't have anything. It's a very small town. Looks like Acuña, Coahuila, where I came from. So they say, they come to me and says, Oscar, can you help us sell that property? And we want to sell it because every time that there's a repair, we have to go and check the repair, and then we have to go back, buy the tools, or buy whatever it was broken, take it back, repair it, and then come back. So we're wasting our time just going back and forward. So we want to sell that property because it's not a big market in Los Hills, and we just want to sell it. So, okay, what are you going to do with the money? And they say, well, we want to pay our truck, and our truck is in our business. I said, well, if you pay the truck, then there's no tax savings. So you're going to have to pay taxes on everything. And he says, so what are you suggesting? I said, well, the problem that you're having is that you're selling a property in Los Hills because it's so far, and there's no Home Depot, no something over there, and you don't want to deal with that headache, correct? I said, well, why don't you sell it and buy 2 properties? And if you buy 2 properties, then we can do a 1031 exchange. And if we do a 1031 exchange, you don't pay taxes. This is great. And then they go and they try to buy in McFarland. And they put an offer in McFarland, and then they call me and says, hey, I said, well, what are you doing buying in McFarland? McFarland is about an hour from Wasco. I said, I thought that the reason is that you wanted to buy in a more rural property, more rural city, I'm sorry. So what are you doing buying in McFarland? McFarland is still a small town. They say, yeah, that's what I told my husband. My suggestion is to buy in Bakersfield. So, we closed 2 properties in Bakersfield. Now, the 2 properties in Bakersfield, they cost around, one of them, it was $325. With $25 down payment, the interest rate was, for an investment property, you should do your loans with Juan and I because we give excellent rates. You probably gave a 7.8, we give a 7.125, right, Juan?
Yeah.
And we make money also on it. Yeah, so we're promoting Juan and myself here. So the payment is $2,000. On a 325 with that interest rate, with the taxes and insurance, the payment is $2,000. Guess what the rent is? The rent is $2,100. So they're making $100. Assuming that there's no repairs, assuming that there's no vacancies, the market rent is $2,100, $2,000. Now, obviously, and this happened with both properties, and obviously the client calls us and says, well, Oscar, I was making $1,600 on the other one. I mean, I was renting the property, the one in Los Hills, for $1,600, and now I'm not gonna make any money. So that doesn't seem like a good investment. So, I was, a while back, I think it was last year, there was a show about the Lakers. And I think it was called, I don't think it was called Legacy. There was multiple shows. One it was Winning Season, another one was Legacy. One of those shows. At the beginning of the show, what they tell you that the guy who purchased the Lakers, he was a real estate investor. And that's weird. He was a doctor, and then as a doctor, trust me, as a doctor, he didn't have enough money to buy the Lakers, so he started investing. He worked with his mom and started investing. Boom. He had enough money to buy the Lakers. He sold a building, and with selling the building, he was able to buy the Lakers. Now, this week, a new show for the Clippers came out, and the owner of the Clippers was a very bad guy. And the first show it tells you the reason that we're rich is because we own half of LA. Own properties. So that's how they became rich. That's how they are the owners of the Clippers. So buying real estate is a great investment. I already told you I'm very conservative. Very conservative. But buying real estate, investing on real estate is very important. It depends on how you're going to talk. If the client tells me, hey, Oscar, but I'm only going to do, I was making $1,600 on this one, I'm just making $100. I said, well, you're not making $1,600, let's just hold your horses. You were making $1,200 because you were paying taxes and you were paying insurance. So you were paying taxes and insurance, so you're $1,600 from over there. I know that you felt $1,600 in your hand, but in reality it was $1,200. Now, the two properties, correct me if I'm wrong, but I'm going to lie a little bit, and Juan is going to allow me to lie because we're promoting ourselves that we do excellent loans, right, Juan? Yeah. The properties were appraised at $350. So the properties were appraised at $350. So the client is already making $25,000 on the purchase. If you go and check, this is not me coming. If you go and check the value of the properties in Bakersfield during the last 10 years, you're going to see an appreciation of at least 8%. At least, let's just say 5%. So let's talk about the appreciation of these properties in the next 5 years, in the next 3 years. If I just talk, hey, just 3 years. Now you have two properties. Now you have an equity of $80,000 from the get-go, plus the $25,000, so you already have an equity of $100,000 on each property, and if it appraises 5% in the next 3 years, so the property is worth $350. If it appraises 5% for the next 3 years, at the end of the third year, the property is gonna be worth 400. So at the end of the third year, with luck, the property is gonna be worth 400. Now, in a single property, in 3 years, in a single property, you made $75,000, correct or not? Do you all follow? He purchased the property at 325. The property was worth already at 350, so there was $25,000 there. So that's why we're basing it on 350 with an appreciation of 5%. The property should be worth in 3 years $400,000. If you want me, I can change the appreciation to 3% if you want me. But in 3 years, we're projecting that you're going to be making of equity $75,000. In 3 years, you were making, and that's in one property. So if you purchase 2 properties, now you're going to be making $150,000. Do I need to remind you that you were making $1,200 a month on the other property? $1,200 a month in the other property times 3 years, that's about $40,000. So you could be making $40,000 on the property, or you can be making $150,000 on 2 properties. Does it make sense or not? Does it make sense? Guys over there?
Anybody?
Now, I'm not gonna lie to you, I'm very conservative. I just sold a property in Texas and I sold it, I made double the amount. I purchased the property at 160, I sold it for 380. Guess what I did with my money? I put it on a CD. I put it on a CD. As soon as I got my money, I put it on a CD. So, I'm not saying that I have the same mentality as Dennis Pulido. I had Dennis Pulido, that's a perfect combination. I mean, if you want to know a person that is more messed up than that, Dennis Pulido, fuck. That's the worst combination that I could come up with. So I don't have the same mentality as Dennis. I don't have the same mentality as my brother. But I do have the mentality of telling the client, hey, this is your situation. And your situation, I'm not going to go overboard. I'm not going to go overboard. If I see that a client has a lot of debt on his credit, if I see that a client doesn't have enough money to cover rents, if I see that a client, I'm not as aggressive. But if I know that the client doesn't have too much debt, I know that the client was self-employed, I know that the client is making tons of money. If the guy is making tons of money, has plenty of cash, dude, this is the way to go. No brainer. No brainer. And I can say it with freely, even though that I don't have that mentality, you should be doing this. You should be doing this. Why you don't do it? Oh, because I'm scared. I do it every now and then. But this is the way to go. Good, do it. Juan is here. They were only planning on buying 1 property. I convinced them of buying 2 properties. Convinced them to buying 2 properties. Why? Because it makes a lot of sense. It makes a lot of sense. But you have to show it to them. Now, with you guys, I'm trusting you guys that you trust me, and I don't have to show you the appreciation of Bakersfield. But with the clients, I do show them the appreciation of Bakersfield. I do Google it, and I Google it in front of them, and I show it to them. Look, this is how the appreciation in Bakersfield is. So let's do the numbers. And then I go very conservative because I'm a conservative guy. I go very conservative with the 5%. I can even lower it to 3% if you want me to. And it still makes a lot of sense. It still makes more sense than making $40,000 in 3 years with the rent of the property that you have, or doing this. Guess what? The mortgage is fixed. If you need to talk to a client and you need to be understanding all these terms, the mortgage is fixed. The rents are not fixed. Every year you can increase. And how much can you increase the rent every year? There's a minimum of 10%. So that 2,100 in 3 years is not going to be 2,100. In 3 years, it's going to be 2,500 of rental income. So now you're not making $100. Now you're making $500 a month. On top of this. Because your payment is fixed, the rent is not fixed. You're always going to be increasing the rent. Makes sense? It does? I said that if there's no participation, there's going to be a very boring meeting. Zoomers?
Yes, makes sense.
Questions? If you're doing a flip and you're talking to a client who wants to do a flip, I don't have it at hand, but I was driving with Enrique, and Enrique does a lot of flips, and Enrique tells me, hey, I went to Portland. He went to Portland about a month ago, and he does. I always like to tease my brother, both of them. But he says, I went to Portland, and on the flight back, I met a guy who was very intelligent. He was an investment. I mean, and Enrique always, when he talks like he discovered America. And he was this, and wow, and the guy, and everything. And I'm like, okay. And he showed me an Excel spreadsheet when he can tell you the amount of profit that you can do on a property if you build an ADU and all of that. So it was amazing. Let me show it to you. And as he was showing it to me, I said, the weird part that I'm thinking, Enrique, is why you didn't have this before, if you were always investing. And so I had it, but I had it in a very Mexican way. He just pulled a rabbit out of his ass. But I'm very savvy with Excel. So I don't have that formula because I felt like Enrique, this formula is, it's a piece of cake. I mean, why don't you have it from the beginning? I mean, you should have it. This guy, he didn't show you America, dude. He showed you, it was the islands, or I don't know, but it was not America. This has always been out there. If you Google it, it's there. If you go to YouTube, it's there. Probably Dennis already has it. So it's a very simple situation of how much money you're going to invest, how much money you're going to put as repairs, how much money you're going to sell it, how much it's going to cost you to sell it, how much are you going to pay on a monthly basis, and then you see the profits. And if you're able to talk to clients in that way, regardless if it's an aggressive client or it's a conservative client, you're gonna do very good business. Very good business. The clients, I don't know if they call you, Juan, I'm pretty sure that they did, but the client calls them from Bakersfield and says the real estate agent over there, the real estate agent, Oscar, your team, Juan, everyone, amazing people. Amazing people, very professional. They help us with everything. Very happy. We sold their property. We got the loan for that property. We purchased 2 properties, and we did the 2 loans of the 2 properties.
And they have money left over.
And they have money left over. And they had money left over to probably pay the truck. I said, don't pay the truck. The truck is tax deductible. It's your business. Don't pay the truck. Keep the money. Go to my accountant and he's going to tell you how to move the money, and you will see it in 8 months. Questions, comments? Another thing that is very important as mortgage loan officers to understand is the value of money. The value of money in the future. So, I started in this business. I started very young, very handsome, and I started with everything was stated income. Everything was stated income. And I came as a consultant, and I came a consultant from the computer world. And in the computer world, in the year 2000, everything was going to explode. So there was 2 computer systems. Everything was going to explode because every computer software that it was for the businesses, it was a 2-digit computer software. And if it was a 2-digit computer software, the main problem that everybody thought that it was going to crash is that if you go 97 98, 99, and the year 2000, the year 2000 was gonna be the year 00. So the year 2000, if it's 00, the systems, they were gonna think that it was 00 before the 98, before the 97. Not the 00 from 2000. It was gonna think that it was 1900. And everybody was, yeah, you don't believe me, Maria? So everybody was so afraid. So here comes two computer softwares. One it was SAP, and the other one's Oracle. That they fixed the problem. Now the days are gonna be 4 digits. And if you buy me, which it was $1 million software, if you buy me, then we can change your system for whatever computer you were using to these computers, and now the days is a 4-digit, and you should be covered with that. So the year 2000 came about, and nothing happened. Nothing happened. So as soon as the years went by, the whole .com and the whole internet and everything exploded. And there was the bubble. And there was the bubble. I didn't know what to do. I mean, obviously I was in the business and I don't know what to do. So I was always traveling, and Jorge told me come here. And then I started working here, and we were doing a lot of business. Stated income. I remember I was working in a company, and I talked to the broker. I asked the broker, and I said, hey, do you think there was going to be a bubble in real estate? Is there going to be a bubble in real estate? And obviously, nobody likes a smart ass. I don't like Angelo, and I don't like Pulido, to be honest, because they're smart asses. So the guy ignored me. He says, what are you talking about? I don't even know what you're talking about. I said, well, I came from computers, and there was a bubble, so I want to make sure that there's no bubble in real estate. He says, I don't know what you're talking about. Shut the fuck up. So happens to be that there was a bubble in real estate in 2009 and 2012. I had in my bank account, I don't know if I should share this or not, but I had about $100,000 in my bank account. At the end of 2012, I didn't have anything in my bank account. Boom, 0. Lost everything. Dr. Dre said, best friends and family, I lost them both. So I lost everything. And I was so pissed about it. And in my mind, I said, if I ever get to $100,000 again, I'm going to quit this freaking job. And I'm going to go back to Mexico and be with my $100,000. It took me a while to get to that point, and once I got to that point, obviously I stayed with the business. One thing that intelligent people know, not me, but intelligent people know, that if it's a bubble, it's going to go up again. Trust me. Now I think of that mentality in 2012. 2012 is 12 years ago. And I think of that mentality because in that year, I was set on my mind that if I ever got to $100,000 again, I was going to quit this job. I go back and I think about it, and I said, $100,000 is nothing. $100,000 is nothing. And in about 2018, I said, if I ever get to $1 million, I'm going to quit this job. I don't want to deal with Maria and her problems with Angelo and the son-in-law and everything. Don't want to deal with it. If I make $1 million, gonna quit. Oscar, you don't have $1 million? Probably not. Probably yes. But now that I think about it, I say $1 million, it's nothing. If I sell my property, do you have $1 million? Well, if I sell my property, of course I do. And if I want to go to Mexico, of course I do. Because if I sell my house, yeah. And what I got here, what I got there, and my 401k, my IRA, more than $1 million. Well, I think about it and I said, it's nothing. It's nothing. I'm not going to be able to survive because I'm so young. So it's not too much money. So in order for me to survive. So the same thing happens with your mortgage payment. And you have to understand that. Whatever was a lot of money before, 10 years ago, is not a lot of money right now. So if I sell my property right now, I purchased my property. Right now it's worth $800,000. and I purchase my property with 10% down payment. If I'm doing a loan with you guys, you're gonna give me a 7.5. If you do a loan with Juan and I, we're probably gonna give you 6.875. But if I do it with you, any of you, you're probably gonna give me 7.5, so I'm gonna leave it at 7.5. Hold on a second, this is not. If I sell my property that I think is worth 800, hopefully it's worth 800. If I sell my property at 800, with 10% down payment, the payment is gonna be $6,000. Guess what I'm paying right now? When I purchased this property, I purchased the property at 560. I remember telling Jorge, do you think it's a good idea? It's a $500,000 property. It's a $500,000 property. And he says, go for it. Go for it, Oscar. I said, well, Jorge, it's a lot of money. And then there was another loan officer that he was not producing as much loans as I was. He was a good producer, but he was not producing as much as I was doing. And he purchased a property exactly in that time for about 820. And I went like, he's buying 820? And there was two loan officers actually. One was Juan and another one Celia. Both of them were buying properties in 800. I said, those motherfuckers buying a property for 800,000? And I'm scared of 560, so I purchased the property. Guess what I'm paying right now? $3,000. I'm paying $3,000. $3,000 with taxes and insurance. If I want to buy it right now, it's $6,000. So, I know what it's like. But the price of money today is not going to be the price of money in the future. Not going to be the price of money in the future. So, $3,000 that seem a lot of money is still a lot of money to me. I'm very conservative, so if I'm conservative, $3,000 is a lot of money to me. But it's not $6,000. I purchased a business with a friend. I partnered with a friend, and I purchased a business in Mexico. We make ice. And in the ice, we purchased the business for another person. And the other person, in the deal that we made, we're supposed to be paying him $50,000 pesos every month for the next 5 years. So my partner, who's super intelligent, and has a business in Dallas, Texas, he says, Oscar, should we pay the guy in full right now? I said, no. Because $50,000 pesos right now, is not going to be the same 50,000 pesos in the future. So, what happened with the economy of Mexico? Everything, and here in the States also, everything went up. Everything went up. When everything went up, we have to increase our prices of the ice. If we increase our prices, now we're making more money. Guess what? We're still paying 50,000 pesos to the other guy. We're still paying 50,000. That's the same thing with mortgage. You're still going to be paying the $3,000. I'm still paying $3,000, and I've been paying $3,000 for the last X amount of years, and I'm very happy with my mortgage. So, when you talk to clients, make sure that if a client hits you with one thing, that you know how to pull the Excel, put everything, put the calculator, put the internet out. If the internet gives you all the forms, the projection of the forms. Dawson is not going to lie to me that we had a software that it can project the appreciation on any city of any country, on any state. And if the client needed to know what the property is going to appreciate, it was very aggressive. It was with high percentages, but there was a report that will tell you this is how much the rent is going to go up. This is how much the property value is going to go up, projected, based on the last years. This is how much money you're going to do. Now, if it's a client that is in too much debt, probably that report doesn't apply to him. But if it's a client that has a business, has money, he's been saving. If I tell you how much I save every month, you will laugh at me. If I tell how much I save to Dennis, if I tell Dennis that I save every month $1,000, he says, Oscar, you're stupid. You're stupid, you should be investing in property. If you have enough money to save $1,000 every month, you should be buying properties. Right or wrong, Dennis? Oh, Dennis already felt this.
Say it.
Oh,
Why? Because the risk is not too much risk. It's not too much risk. So know that, see the clients, and go with that. Questions, comments? Should we stop?
You gotta invest $2,000 a month in real estate at least.
So I could be paying my mortgage. But why am I going to pay my mortgage if the same $3,000 is not going to be the same $3,000 in years? So if I let the bank borrow the money, I'll borrow the money, I don't pay my mortgage. I don't send more money to the principal. Questions, comments? Situations that have happened to you that you want to discuss? Okay, well, let's go. Bye.
No, the people who aren't there are the ones that will have the